Supply chain problems may push up auto insurance rates. Supply chain woes. The biggest single factor currently affecting the auto industry also has the potential to eventually push up auto insurance rates, supply chain disruptions. Much ink has been spilled over the critical shortage of semiconductors. Without those high-tech chips, assembly lines have been standard, and with the limited stock coming off by the assembly line, prices for the new vehicles available have been running up. But semiconductors are not only missing piece to the auto assembly puzzles. Nearly every component from filters to seat leather has either faced supply issues or price pressures due largely to factories struggling to resume full capacity of COVID. Disruption of number of commercial media, and with more money potentially going out in claims, premiums eventually will have to follow. Pay as you drive. A snarled supply chain is now the only narrative in the auto industry year through, and in the driving factor, so-called usage-based insurance. These policies accounted for 19.6 billion in perfumes, and in 2021, these policies use some sort of tracking technology to match insurance premiums to driving habits. People who speed more pay more. People who drive safely pay less. Together, these data points insurers either rely on devices they plug into the vehicle's diagnosed part or mobile app installed on their driving phone, and increasingly and on the board of the computer. Usage-based policies are always voluntary and are not available in every state. Nationwide, according to the research published by Nationwide, 62% of the drivers said that they were concerned about the information their telematics device. But then, concern didn't stiff demand. That same survey showed 65% of the drivers said they would allow telematics to monitor their vehicles. Right now, the major factor holding back usage-based insurance seems to be a knowledge gap, with only 27% of consumers telling Nationwide that they even know what their policies are. But as more drivers discover they potentially could save money with these devices, the knowledge gap is sure to close. Self-driving. Autonomous automobility is moving forward at a breakneck pace, but state insurance regulators are still moving in the same of the part. Some states have written laws to allow to driverless vehicles, but they require to the owner to buy extremely large insurance policies. In some cases, more than the trouble is liability for the parks. Others said the minimum liability coverage in the millions. In a wreck, who is liable? There is still a little time to work out the legal framework. The hope is that since the vast majority of accidents are chalked up to human error, machines would not have quite as many wrecks. But in the meanwhile, every major accident have its own conclusions. From supply chain, in largest roles played by the technology, 2022 promises to be an eventful year for auto insurance. Most state increase filled with state regulators for this year have been in the single digits, but industry are holding their breath to see how all changes will impact rates over the longer return. But state insurance regulators aren't all moving quite so fast. Would the manufacturer be at fault? The programmer